we wanted to talk today about the student loans, especially the student loan forgiveness stuff that's going on. And we're going to look at some videos and some articles about that just to give you some perspective. But right now, there are three main articles, or not articles, arguments against the student loan forgiveness that Biden's proposing, or any student loan forgiveness for the most part. The first argument is it's going to raise the debt and the deficit. This is not entirely true. To the deficit to a degree, but the debt not so much. So we'll look at that. The other one is going to be, well, it's not fair to people that didn't go to school or already paid off their student loans. Right? We're going to dispel that one too, because that's not how things work. And three, the other argument is, why should I have, as the taxpayer, have to take on the burden of paying somebody else's student loans? Right? So those are the three main arguments, and all of them are kind of bunk. So if you agree with it, great. We're going to give you some tools. So if you get into this discussion, you have something to clap back with to those talking points. And if you're for it, then leave us a comment if you don't like it or you disagree. But I think you're going to have to rethink your position on why you don't want it. So we're going to look at a video real quick because the Supreme Court's looking at it now for the Biden thing. But we're going to look at this video and we're going to dissect some of it because they break it down pretty well. So this is, who is this? You sent this to me. This is CNBC. So we're going to watch this real quick.
Student debt is being lifted by President Biden, members of Congress who support it, and it is right. We ask the United States Supreme Court to believe in the certain inalienable rights.
So we can let an unelected body try to take away relief for our families that are struggling every single day, and the pandemic made it worse for them.
Since the COVID-19 pandemic, student loan borrowers have had a moratorium on their payments. The pause on federal loans has lasted over 3 years, but now over 40 million Americans may be hit with a bill some borrowers have never even seen.
So here's the deal. For the last 3 years, there's been a moratorium where you didn't have to pay down your student debts. They just kind of froze them, right, because of COVID. So a lot of these kids that graduated in the last 3 years, 4 years, whatever, have never paid a student loan payment. And now all of a sudden they're going to get hit with payments that they're not expecting. So you're going to see a rise in defaults, deferments, all that kind of stuff. So that's one of those things. The other thing is a lot of people right now are in student debt. I mean, it's 1.8 trillion is the total amount of debt, or federal debt at least. These people are now going to have to start paying it again, which is going to harm the economy because that means these people are going to have less disposable income to spend. So there's an potential economic crisis or recession that could be driven by 44 million people now all of a sudden having to pay all this large bill every month, right? So that's part of what the concern is. So they're going to keep going through this. I just wanted to clarify that.
Years, advocates and borrowers have been pressuring the government to act on student loan forgiveness, saying that the student loan system was broken. Outstanding student loan debt is marching towards $2 trillion. You have over 1 in 10 borrowers in delinquency or default, and a number of other issues with the lending system.
So I'm going to skip part of this. They're going to go into the cases here. There were 6 lawsuits. 2 of them made it to the Supreme Court. The others were shot down. So they're looking at standing. Are people actually being harmed by the student debt forgiveness? That hasn't really been established, right? The other is does the president have the power to do this? And he's declaring that he does under the CARES Act, the HEROES Act of 2003, which allows him to do this, especially in states of emergency, right? It's just this is being done to a much larger extent. So there's a big question about that whole issue. that the Supreme Court is hearing. Now, initially, the thought was the Supreme Court, since it's very conservative, would probably just shoot it down. However, what happened was during the initial hearings, there was rumors and a lot of indication that they felt that the attorney for the president made a much better case about why this was within his power and this was actually necessary, and that the others were just doing it as a political stunt, which is true. But she made a really good case for that, which is kind of shot down their whole plan here. But we're going to skip to this real quick. So here's I think this is going to be Jason Furman. Jason Furman was a White House economist, but he's going to talk a little bit about this and some of the negatives that he sees in it.
Debt relief plan is its impact on an already indebted economy.
I've been critical of student loan debt relief for the last 2 years, but the plan came in, frankly, much worse than I expected. And at this point in our economy, we really don't need to be adding $500 billion of deficit spending for a purpose that, frankly, includes wealthy law students and business school graduates getting tens of.
So here's where I'm going to disagree with Jason Furman. He's a great economist, don't get me wrong. The estimate was $329 billion, but let's say it's $500 billion. Okay, that's $500 billion over 10 years, so it's $50 billion a year. Okay, not a big amount of money over a 10-year period when you think about it like that, right? On top of that, he's saying, well, it's going to go to wealthy people. Well, no, because in Biden's plan, it's means tested, so people making over whatever it is, 125,000, don't get it.
Right, 125,000. So, I mean, I guess if somebody went to law school and does not make over 125,000 for that, $100,000 plus they have in debt, they can have $10,000 of it forgiven.
Yeah, but you're talking about a prosecutor making $60,000 or $70,000 a year. You're not talking about a wealthy lawyer.
No. You might be talking about somebody like just starting out or something if they're going to be underneath that,
Right.
if they're in one of those high-earning professions, if they even, make the cut in the means test at all.
Right. So I think it's kind of
And even if they do, it's a tiny little splash in the bucket compared to how much student loan debt they most likely have.
yeah. Oh, it doesn't cover most of it probably. Law school's expensive. The average law school's like $300,000. So yeah, $10,000. Oh yeah, thanks for the help. It's like your grandfather. Like, here's a nickel. Go get a soda. Yeah, Cokes are like $1.50, Gramps. So anyway, we'll go through this a little bit more.
Thousands of dollars.
So what the Supreme Court examined at the end of February are two major things. One, have the plaintiffs here actually proven that they've been harmed by student loan forgiveness? In order to challenge a policy in the courts, you need to prove that a policy has caused you injury. It's called legal standing. Do you have legal standing? The Supreme Court justices considered if the plaintiffs had proven that they will be harmed by student loan forgiveness. The other point that the Supreme Court was considering at the end of February is the president acting within his rights in forgiving this amount of student debt? While the Biden administration points to the HEROES Act as justification, the plaintiffs say that law allows for much more tailored relief than the type of sweeping debt cancellation the president is trying to carry out.
So that's the basic issue behind this whole court case. Now, I want to look at more from the perspective of the argument. So let's look at this. So the argument about taxes and like, why should I have to pay, my tax dollars have to pay for people's college, right? Or people's student loans. That's one argument. Here's the simple analogy, counter argument. Lacey, you don't have kids, right?
Correct.
Nor do I. So why do our tax dollars have to go to fund public schools? Why are we subsidizing other people's kids? We don't have kids. Why are we having to pay for that?
Right.
Do I approve of bombing in Yemen? Do you approve of bombing in Yemen?
No.
I don't approve of that. Why do my tax dollars have to go to that? Because that's how taxes work. It's collective, right? Why do my tax dollars go to fix a rural road in some town I'm never going to go to? Because that's how taxes work. So this idea that, well, why should my taxes go to this? You don't get to choose where your taxes go, bro. It doesn't work that way. So that's just a stupid argument right there. The other thing that I think is really stupid is this idea that for somehow student loans don't already cost money. Not just to the loan borrowers, but to the taxpayers as it exists. So let's look at this real quick. I want to look at just statistics for student loan debt. And this is the Motley Fool. So 2019 is what they're looking at, okay? Their key findings. First quarter of 2019, there was an estimated 5.2 million federal student loan borrowers in default. Okay, so the 44 million or 40 million, right? Like she said, about 1 in 10 are in default. But 3.4 million are in deferment, which means they're not paying it now, but they have to pay it, whatever, 6 months, a year from now. And 2.7 million are in forbearance. But they're dealing with it, right? Then you get to 20% of student loan borrowers were behind with their payments. That's not including these this over 10 million here. Another 20% are behind because the payments are too high. So they're barely paying the interest or a little bit of the interest, so their debts are racking up, right? And so when you go through this whole thing, average student loan debt, and we can go through this, what I want to point out is here's the total student loan balance. 2004, it was 345 billion, and it's grown each year after that, as you can see. And then you get to 2017, it's 1.386 trillion. You get to today, it's about 1.8 trillion. So the total amount of debt grows every year, right? Because more people go to school and borrow money. And it takes people decades to pay it off most of the time. And they're only in school for usually 4 years. Sometimes longer if they go to grad school, right? So the amount of debt is just going to keep growing and growing and growing and growing and growing. It's not going to stop because it's not getting paid off quick enough. So the other question is okay, if that's the case, then how much money are we making as a country on the debt? We should be making money on the interest, right? Because we loaned it out, we should be getting interest. Well, the reality is it doesn't work that way. And we'll get into that in a little bit more detail in a second, but essentially what it is Lacey loans me $50. And I tell her, okay, I'll pay you back $60. Right? And so I pay Lacey back the $60. But Lacey borrowed the $50 to loan it to me. That's how the government does it. The government doesn't just have a stack of cash that goes to loans. When the student loan amount comes in, they issue treasuries and take on debt and borrow it at interest. So Lacey owes $55 on the $50 she spent, right? Because she's got to pay that interest, but then I'm going to pay her $60. So she should still make it ahead, right? Except for Lacey doesn't have the ability to manage the loan. So she has to go through an intermediary, a lender, to do it for her. And they're going to charge her fees on that, right? And so they charge her $15 in fees. So now Lacey has to pay the $5 in interest plus $15 in fees. Lacey's got to pay $20. So when Lacey gets the loan back from me, the $60, right, my 50 plus the 10 interest, Lacey's got to pay out $20. So now Lacey's $10 in the hole from the whole beginning. This is what's been happening over the years. And it's just exponentially growing, which is part of the problem. So as we get into like this, I'm going to do here's where NPR did an article. The U.S. government underestimated the cost of the student loan program by billions. All right, so from the U.S. Government Accountability Office, the Department of Education miscalculated the cost of federal student loan program. From 97 to 2021, right? So 24 years. Education Department estimated the payments from the federal direct loans, this is just the federal direct loans that they had, would generate $114 billion in profit for the government. What they actually found was it cost them $197 billion. So it's a $311 billion difference. They were supposed to make 114. It cost them 197. So they lost money. And that's just that one part. That's not all the different costs. That's just that one portion of it. Right? So the government lost money. So you as the taxpayer to sit there and go, well, my taxes shouldn't be going to pay your loans. They already are. You're paying the fees, the deferments, you're paying all that crap. You're paying for the interest. You're paying for it. I don't know what to tell you.
Don't let them pull the wool over your eyes.
Yeah. So if you sit there and go, well, I shouldn't have to pay for your student loans, I agree. They should just be forgiven. That way you won't have to pay for them. Because the interesting thing is, all this is already accounted for and paid for. So if they're forgiven, it does not going to increase your taxes. It's not going to increase the debt. The only increase to the deficit is now they're not going to get the revenue they expected from it. But over the long run, they're going to save money. Right? So does Lacey keep giving me that same deal over and over and losing money every year? Because, well, she'll at least get the $40. Or does she just go, screw it, I'm just going to get rid of it now, so I'm not eating a loss every year? And especially a loss that's going to grow every year in perpetuity. Sometimes you just have to...
It's going to get worse.
Sometimes you just have to say, this is a bad investment, and I'm just going to have to suck it up and take my losses. Otherwise, it's
right.
just...
Like when you've got a losing stock in your portfolio, all right, you might hang on to it for a while and see if it turns around, but then at a certain point, it just keeps going down, 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 down. You just like, all right, man, cutting my losses, right? You don't hold on to it until it's
Absolutely.
Literally in the ground.
Right. Well, if you bought a house that was underwater and it just kept costing you more and more money in repairs every year, wouldn't it just be better to just sell it at a huge loss and just get rid of
At a
it?
certain point, you might hold out for a little bit, but then you're going to go, all right, man, I just got to get rid of the loser.
Well, I think 24 years should tell you. Plus, like we said, it's going to get worse because a lot of these people are going to be paying it now for the first time or haven't paid it in a while. So there's going to be a lot more defaults, a lot more deferments. So even fewer.
24 years. If you were in a relationship with a person for 24 years and that was how the math was shaken out on the thing and it was just not a good relationship, you're probably going to cut your losses at a certain point, right?
Absolutely. I would say it's time to bail. Now,
Time to bail.
I wanted to look at this one real quick. So Forbes did a thing about the pros and cons of college because of the cost, right? Now, the cost, I want to do this. We covered this before, and you can go back to our previous video. But in the 80s, the Southern strategy under Reagan, they wanted to try and reduce the number of minorities going to school and poor people. So it hurt poor people, whites, but it mostly hurt minorities. So what they did was they said, well, in the 60s and 70s, colleges were really, really cheap. And in some states, they were free. And the idea was, well, college education should be free, public education, just like public school. Because it's a public college, it's public school. The thought was, we need more educated people in this country to be competitive as a nation. So college should be free. It should be covered by the taxpayers, by the government. So in the 70s and 80s, you paid next to nothing to go to college. Why? Because it was mostly paid for. Now, these same generations, these Gen Xers and then the boomers, that got most of their college paid for by tax dollars are saying, I don't want to have to pay tax dollars to pay off your loans. When what they did was, under their generations, the loans the amount of subsidies from the government got cut so much that the students had to borrow more and more and more. So we all got screwed. So the idea is college still, a good idea? Well, it's kind of a necessary thing considering now 75% of new jobs require college. But what I wanted to do with this article is they talk about how much does college cost and college planning. They do this. Why is college worth it? And these are just 3 reasons. College graduates earn more than non-graduates. That's a fact by a significant amount. It's almost double. Majority of jobs require college education. Like we said, 70% of all jobs will require some college education by 2027. 70% by 2027. Think about that. That's 4 years from now. Without some higher education, right? Even though it's just an associate's or certificate. And college graduates are more likely to have health insurance because they're more likely to have jobs that offer it. And then they say 3 reasons why it's not worth it. You'll have a lot of student debt. That's the problem. Well, if we eliminate a lot of the student debt, then you won't. So we could take that problem away. The government could take problem 1 away, no problem, and get more people going to college. High-paying jobs aren't guaranteed. Well, nothing's ever guaranteed. And it could take more than 4 years to graduate. Well, that goes back to number 1. So now you're paying for an extra year or 2 years. I mean, it took me 5 years. Right? So I want to point out that the negatives to college can pretty much be eliminated just by fixing how we pay for it. Right? And, like we pointed out, it's a benefit to the taxpayers because now you're not subsidizing our loans all the time, which you're doing right now. Part of your paycheck goes to taxes. Part of those taxes go to subsidizing the fees in our loans. It's not reducing our loans. It's not reducing the loans of anybody. It's not putting more money into the economy. You know what it's doing? It's paying banks and lenders to stay in business. You look like you wanted to say something on that. No?
No, not on that in particular, no.
I mean, you'd be upset too. I mean, if 2% of your paycheck went to pay off some random lender every month, you'd be pissed.
Yeah, I mean, who's excited about that?
Right.
Nobody ever, right? Nobody's excited about that.
Nobody. So I'm going to get into the last bit here. So, last couple things. So, I like this article from Slate. This is a little bit older, from 2021. An extremely important statistic about student debt that has never been published. Now, here's part of the problem. Here's a question you might think would have been easy to Google answer. How much money does the federal government collect in student loan payments each year? So the journalist of this article tried to look it up. He's like, at the time, Joe Biden had just won, blah, 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 but it wasn't clear. Democrats in the Senate, da, da, da. So what he did was, how much money would borrowers take, blah, blah, blah. So what he did was, what was it? He asked about it, and he looked into it. He'd never seen the number, couldn't find it, and there's a good reason, which I learned as I emailed higher education wonks in Washington. The Department of Education does not actually publish straightforward figures tracking how much money it collects from borrowers each year. It also doesn't how much it costs, at least not useful ones. So the data the agency releases annually combines the regular principal, blah, blah, blah. So what he figured is the grand total was roughly around $70.3 billion for 2021. So that's what people paid towards their student loans. Now, most of that went to interest. Now, of that $70 billion, once again, it's the Lacey example. She got $70 billion, but then she had to pay of the principal. She had to pay interest, and she had to pay fees and all that. So Lacey didn't get all of her money back. The government didn't get all of its money back. And so who subsidized that? Tax dollars. But think about that, $70.3 billion. What if you forgave all the student loans? That's $70.3 billion in the pockets of those people, which means those people are paying higher taxes now because they're not deducting their student loan interest, right? And they have more money to spend. So that's money that goes back into the economy, creating more jobs, creating more tax revenue. So just profitably, just in a very cold-blooded, profitable sense as a tax collector, or as a taxpayer, it's in your best interest to just let it be forgiven. Because right now it's just an ever-growing pit that you'll never fill. And more people are going to fall into it. And we're not going to have enough college graduates to fill the jobs that are required. Right? And so you're going to have more and more of these people that are unemployed or just not even looking for work.
Listen, I have a lot of students that are pretty hesitant about the idea of going to college because they just look at me and say point blank, I don't want those loans.
Yeah, but that's the problem is how are they going to get a job if in 4 years 70% of jobs require some college education?
Right, but the point is they're looking at it and they're like, well, within this lose-lose scenario, I pick not being saddled in the debt.
Right.
If we have a whole bunch of kids that pick that, then look at the snowball effect that's going to have.
Well, and then what it does is what was sort of designed to do when they started cutting the amount that government would pay towards it is now it's only really for rich kids, which are mostly white.
Right.
That's what it's supposed to do. That's the plan. That was the plan in the 80s. And they just continued on with it. So I have one more argument to sort of back this up. So Mark Kantrovitz. If you guys don't know who this guy Mark Kantrovitz is, look him up. He's kind of an expert on student loans and how this works. So does the government profit off student loans? It's like it should be simple. Does the government profit off student loans? Depending on who you ask, the federal government either earned a profit or lost money on federal student loans prior to the pandemic. The answer depends on political and accounting perspectives, right? But by foregoing nearly $5 billion a month in interest, the student loan program swung from a profit to a loss, even the most optimistic projections especially during the pandemic. So it's absolutely operating at a huge loss today, no matter how you spin it. Right? And so he goes into how you calculate it and whatnot, but the federal budget doesn't really explain it all that well. But he gives us the program costs are expressed as percentages. For example, a cost of 2% means the cost of federal government $2 over the life of the loan on a net present value basis for every $100 borrowed. So what he's talking about is what the cost is to the government to keep these things going. And then he shows the different projections and all how that. But he goes into this, which is important. Where does the money go? And like we said before, the loans are funded by issuing treasuries. They're not paid for in cash. They're paid for by government taking on more debt. Right? And that money's borrowed from investors. So they have to pay that back at interest. And there's also a fee paid to the U.S. Department of Education and Treasury to cover this because they got to hire staff to do this. And then the loan servicers, right, which are private companies like Navient and Mojita and all those, they get fees to service these. And they've had lots of corruption and problems with not, giving up PSLFs and other forgiveness programs and things like that. And they've had a lot of things where they've misled students. So there's all this shit going on. And the reality is that you're not making any money. So to make this argument that it's not fair, right, is ridiculous, right? Of course it's not fair. It's not fair when Trump gave the $1.9 trillion tax cut to the rich and corporations. But I don't see any of these people bitching about that. But, some nurse gets a $10,000 student loan relief package and everybody loses their minds.
Yeah. Well, let's talk for just a quick second about some of the student loan forgiveness stuff and how it impacts your wallet. Okay, we've been talking a lot about the Biden loan forgiveness,
right.
But what has not been getting a lot of attention, it deserves some attention.
Right.
So I'm going to throw it out there to you guys and ask you to do a little bit of your own Googling here. So if you remember back in, Duncan, I'm sure you'll remember because this is our time frame, the single-digit 2000s.
I'm not that old, Lacey. Yes, I remember back then.
All right, please let us know in the comments if you believe that Duncan is not that old.
The answer is yes.
I'm going to win that one.
Yeah.
hands down winning that one for sure. Even if they think you're younger than that, they're going to side with me. So
It's the gray hair, isn't it? It's all the gray hair. That's gives a dead giveaway.
You're striped when you do that to your head.
Yeah,
you're
you can
striped.
see. Yeah, I'm a little zebra.
Yeah.
Good. So
Right.
early
So
2000s.
anyway, so in the single-digit 2000s, roughly is when you could start getting these income-based repayments instead of the standard 10 years, right? Instead of here's your standard 10-year payment. You could choose from these varying options. And in the early 2000s, they implemented this rule that said if you're on an income-based repayment plan for, they set these markers as 20 and 25-year markers. If your balance wasn't paid off, they would become forgiven.
Right.
Well, what would happen back then, and it happened to me, for one, is I consolidated my loans in order to get a lower payment. But every time you consolidated them, they started your clock back to zero. So every time people consolidated to try to, get lower payments, get better interest rates, to finagle that portion of this whole situation, their clocks would get set to zero. Well, right now, as with the public student loan forgiveness, where people have been getting credit for more accounts, people that are under the income-based repayment plans that have nothing to do with public student loan forgiveness, that are looking for the 20 and 25-year forgiveness, they're getting more credit for their payments too. So if this is if you were one of those people like me that was consolidating at various times back then, the reason I keep bringing up this consolidation, one of the things that going back and giving people credit for are the payments they made before consolidation. You're basically unraveling that whole it resets to zero thing. So some people are going to have the opportunity to find out that their student loans are actually done. So people are supposed to be seeing that in action this summer. If you're one of the people that it brings you to completion and brings you to total forgiveness, you're supposed to see that sometime this summer. Other people should see their accounts updated, through the rest of this upcoming year. But it'll move them closer to forgiveness. So even while we're waiting for this stuff happening in the Supreme Court, there's still more things happening with the payment counts and credit people are receiving behind the scenes. So that's kind of one of those things to keep an eye on the news for. If you do some research, you can find articles on it, but it's not what's being publicized as much. So you kind of have to keep an eye out for yourself and be looking at your own student loans to see if you're getting updates there.
And you need to check on that. And the other thing is income-based repayments. Like Lacey mentioned, if you can get that, that's probably one of the best ways to go, unless you want to pay off your debts earlier, and then you just pay more money. But if you're on the income-based repayment plan, it's based on your discretionary income. And that's going to go down some. Plus, what's going to happen too with the Biden deal that is not being challenged, which I think is great, is as long as you're paying your minimum payment every month, whatever that is, you cannot accrue interest on top of your loan. So if you borrow, like now, if you borrowed $25,000 and you just paid what you could and you couldn't pay off the interest, your loan would grow. And so all of a sudden you'd be 5 years later, you'd be looking at like, oh, wow, now I owe $32,000 because interest payments or interest you didn't pay off, right? Now that's going to stop going forward under the Biden plan. So if you owe $25,000 and as long as you're making your minimum payment, you will never owe more than that $25,000. So those are all good things, but you got to check on this stuff and be diligent because the loan servicers like Navient and Mojita that do the lending that we pay our tax dollar fees to, they're not going to tell you. Not willingly. So I think that's a good point. But yeah.
It's one of those things that's not getting nearly enough attention, but it impacts so many people's wallets to be aware of this and to be looking for this and to be diligent. Also, there's another thing, because I do my homework on this one because nobody cares more about my wallet than me. And I have found, how you call in and for various things, they will give you like a 1 month forbearance and that sort of thing.
That'll tack on interest, yeah.
But additionally, those are not being given back to people when they're doing the recounts unless you have more than a certain number of months of it. I believe it's like 36
Right.
months of deferments and forbearance. If you just got forbearance for a month
Mhm.
here and there, they're not doing that. But what you can do is you can register a complaint. And have that reviewed to get credit for it if you believe that you were advised into an unnecessary forbearance.
Right.
I will probably do so because I believe I got put into one not wanting to because they would allow you to change your due date. I wanted to change my due date because I didn't want my rent or mortgage payment on the 1st to
Right.
also be when my student loan payment is on the 1st. You don't want your two biggest payments coming out of the same paycheck when you have a tight budget, right?
Right.
You would rather have one of them come in the middle of the month if you're paid twice a month. But in doing that, I was forced onto these 1 month forbearances that I'm not getting credit for,
Right.
even though I didn't want that.
Mhm.
So I'm pointing this out. You might have it for different reasons than I did, but my research has indicated that you can actually get them to give you credit for it, but you're going to have to do the homework yourself, and you're going to have to register a complaint because they're not just going to go back and give you that one
No.
unless you had enough months consecutively. You're going to have to register a complaint and literally complain stating that you believe that you were pushed into this or advised into this when it was not useful to you to
Right.
get credit for it.
Right. Remember when you call the lender service companies, right? It is not in their interest to reduce or lower your payment or forgive your loan because then they lose money. They would rather you keep it. So there's this kind of a problem with that. So I want to do this one quick thing and wrap up. So we're going to try and do this as a short video. We'll see if I succeed or fail. I'm going to try and do this in under 2 minutes. Are you ready to try it?
Sure.
Okay. So, we looked at the arguments and stuff, right? So here at Gossip Finance, right, which you can catch us on YouTube, we like to look at some of the stupid arguments. And so we're looking at the stupid arguments for why student loan forgiveness is a bad idea. And you've probably all heard this argument. We've mentioned it before. But here's Dave Ramsey to make it for me.
A guy who's a welder and a guy who's a truck driver and this gentleman I just met who's a police officer, they shouldn't have to pay off your student loan debt, which is, by the way, your student loan debt, not mine. And I'm a taxpayer, and if it is forgiven and paid by the taxpayers, that means I paid off your student loan debt.
So that's the stupid argument. Okay. Now, I'm going to cut through this because I'm going to try and make this shorter. So let me give you 3 reasons why that's a stupid argument. Okay. First off, will it increase your taxes as a taxpayer? Only if you're receiving loan forgiveness. And that depends on the state you're in. And of course, you'll lose the loan interest deduction. So no, it's not going to increase your taxes unless you're getting it. 2, Dave's college costs. Is it fair? Is it right that I have to pay it? Well, when Dave graduated from college, his annual tuition and fees were $289 a year. That's about $1,282 a year in today's dollars. The student today going to the same university pays $13,374 a year. That's 10.4 times more today than Dave paid. And why did Dave pay so little? Because most of his college was pre-subsidized by the government by taxpayer money. So most of Dave's college was paid for by taxpayers. So now all of a sudden that he has to open his wallet and pay it forward, now he's pissed? Interesting. 3, taxpayers, you're already paying on our loans. Why? Because the government has lost $197 billion in direct loans since 1997. So that means the taxpayers, you, me, everybody else, are paying the fees, interest, and defaults on everybody else's loans every year at a loss. And that number increases every year as more and more people take loans. So it's just an ever-expanding pit of money that us, the taxpayers, are paying. So just to sum it up, will it increase your taxes? No. Is it fair? Yeah, because the boomers and Gen Xers got mostly free college or pretty close to free college, 10 times more than the average person today, for at least Dave here. And 3, you're already paying on our loans anyway. So yeah, I agree with Dave. You shouldn't have to be paying on our student loans. They should just be forgiven. So So if you like that, check us out at Gossip Finance at YouTube. So that, I think, was, I can cut that, but yeah, I think that was a pretty good clip. But that's my summation. I think it's a simple argument. Simple argument for that.